Well people, the future of investing is here, and I suppose it shouldn't be too much of a surprise that it comes in the form of computer algorithms. After all, we have algorithms controlling essentially everything we see online, and computers are starting to handle things like our cars that take us everywhere we go. So why not have the same kind of technology handling our investing? Hey everyone, Daniel here, and welcome to Next Level Life, a channel where you can learn all about investing, debt, retirement, and many other financial topics besides, because let's face it, the schools aren't going to teach it for us. So if any of those topics sound interesting to you, or if you want to learn how to better handle your money and have more financial freedom, be sure to hit that subscribe button and the bell next to my name to be notified every time I upload a new video. So as you can probably already tell, today we're going to be talking about robo-advisors, or robo-investing. I'm going to be discussing what robo-advisors are, as well as giving some of my own personal thoughts about the potential advantages or disadvantages of using them. And I want to stress the word potential, because I'm going to be honest with you up front. As of the making of this video, I have been unable to find too much solid evidence one way or the other on robo-investing, mainly because of how relatively new this phenomenon is to the investing world. And I was initially going to wait until we had a lot of good studies done on the subject that I could reference, but given how new robo-advisors are and how so few of my concerns actually revolved purely around the numbers, I thought it would be better just to do the video now and get everyone else's thoughts on the matter, because it could very well be years before we have a good amount of solidly conducted studies that give us a consensus on the matter. So long story short, this video is going to be a lot different than most of my videos, because I'm not here to tell you definitively whether I think these services are good or bad. I don't have much experience with them, so I just don't really know. Though I know for a fact that some of you watching this video do have a decent amount of experience with these apps. So I encourage you to leave your thoughts on them in the comments section below, because it's going to help me out a lot and everyone else watching this video to get a better picture of the real advantages and disadvantages that people are experiencing when using these apps. So with that being said, let's get started. For the sake of keeping this video from becoming way too long, I'm just going to stick to using the app called Acorns as an example, though it's by no means the only robo-investing app out there. So, real quick, what are robo-advisors? Robo-advisors are digital platforms, often in the form of apps, that provide automated, algorithm-driven financial planning services with little to no human supervision. A typical robo-advisor collects information from clients, i.e. us, about their financial situation and future goals through an online survey, and then uses that data to offer advice or automatically invest the client's, again, our, assets. Now, I was asked on an earlier video where robo-advisors like Acorns fall in terms of active or passive investing. And from what I can tell, the apps themselves aren't passive or active per se, at least not on their own, regardless of whether they charge a percentage fee of the balance of your account or, in Acorns' case, the $1 monthly fee so long as your account has enough money in it. However, based on what I could find while researching for this video, Acorns at least appears to have, or at least had, again I don't use the app so I can't confirm what their options are today, various index or passive investing options. When looking at their stocks, they appeared to usually be in the form of ETFs or exchange-traded funds, and were mostly offered by Vanguard. Some examples that I found were options to track the S&P 500, which has a ticker symbol of VOO if you want to look it up for yourself, as well as Vanguard's Small Cap ETF Index Fund, ticker symbol VV, Vanguard's Emerging Markets ETF Index Fund, ticker symbol VWO, and Vanguard's REIT ETF Index Fund, ticker symbol VNQ. However, assuming that the info I found while researching is correct anyways, Acorns charges 0.25% of the total balance of your account as long as that account is under $5,000. And they charge $1 per month for accounts over $5,000, which doesn't sound all that bad, and in comparison to a lot of mutual funds and several human advisors, it really isn't. But there is one thing that I think should be at least considered if you decide to look into robo-advisors further yourself, and that's the expense ratios of the funds that you're actually buying in the app itself. The expense ratios, or the percentage that you would be charged on your balance, similar to how Acorns manages accounts under $5,000, of the funds in Acorn that people would be investing in are as follows. 0.04% for the Vanguard S&P 500 Index Fund, 0.05% for the Vanguard Small Cap ETF, 0.14% for the Vanguard Emerging Markets ETF, and 0.12% for the Vanguard REIT ETF. all 4 of them have lower expenses than what Acorns is charging investors, which does make sense from Acorns' perspective. I mean, they have to make money somehow, but just based on the S&P 500 index's expense ratio, you would have to invest about $30,000 before you started paying that $1 a month or $12 a year in management expenses. And that's probably going to take quite a while to work your way up to if you're investing just the rounded up amounts of your purchases, which seems to be the case for most Acorn investors. So as far as long-term, straight buy and hold strategies, there's probably better options out there. But when trading ETFs, you may also have to pay transaction fees. It varies depending on where you go, obviously. And depending on how frequently you buy and sell your investments, that may quickly make up the differences in expenses. At least on the surface, anyway. And this brings me to my own personal thoughts on the matter. And I have no proof that what I'm saying here is correct. As I said, robo-investors are fairly new, so there isn't a whole lot of scientific data to back up what I'm about to say, so take from it what you will. And for those of you who have had experience with these apps, let me know if I'm just completely off base here, because I very well might be. But I do wonder how much of a difference using a robo-investor would actually make on your spending habits or your spending patterns. I wonder this because, at least from the outside, it seems like the app is trying to reward you and make you feel good for making those little micro investments, which, again, as far as I can tell, usually occur when you've made a purchase with your credit or debit card, because the app rounds up the purchase and puts the spare change into your investments. So from an emotional and/or psychological perspective, will it actually make it easier for people to make those pretty small but still somewhat frequent impulse buys, like maybe a pack of gum while waiting in line at the grocery store or a latte on the way to work, just because they feel that with every purchase they're getting a little bit closer to their dream retirement? Which, I mean, technically they are, but they're micro investing. And micro investing is usually going to return micro results. I certainly don't want a micro net worth when I get ready to retire, and I don't think any of you watching this do either. And what's more, in some of my other videos on this channel, I've already shown how much of a difference $5 or even $10 a day can make in your financial goals over time. I just fear that using these robo-investors may, again, I don't know, I don't have specific evidence to back this up, make it even more difficult for people to get and stay in control of their finances. Because with these apps, spending money becomes the normal way to save for retirement. And that just seems off to me. So I apologize for the length of this rant, I guess. More thoughts just kept occurring to me as I was researching and recording this video, and I wanted to get them all out there. Whether they're right or wrong, again, I can't be sure. So I hope I didn't come off as too preachy. That wasn't my intent at all. I just wanted to get this conversation started, and I encourage everyone watching this video who has some experience with the Robo-Advisors to leave their thoughts down in the comments section below, because again, like I keep saying, I have no data to back up these concerns, so I may be way off base with my concerns here, and I kind of hope I am, but those are my thoughts, at least as of this recording. Hopefully, together we'll be able to help educate each other so we can learn more and make better financial decisions. But that'll do it for me today. Once again, if you enjoyed this video, be sure to subscribe and hit that bell next to my name so you'll be notified of all my future uploads. I generally upload every single Friday, and if you have a friend that would be interested in this kind of content, be sure to share it with them. Let's really get this information out there and start our own financial revolution.